Hey there, welcome back to Personal Finance with NestEgg, the #1 place to learn about money. I'm Jennifer, and I've spent most of my life in finance. Started working at banks like JP Morgan and Goldman Sachs at the age of 17 and graduated top of my class from NYU and Harvard Business School. Studying, you guessed it, business and finance. And now I work with companies like Bloomberg, WeWork, and Walker Edison, teaching their employees all about financial literacy and wellness. Today, we're going to talk about whole life versus term life. You're probably thinking, how boring, or worse, morbid. But I can tell you that given all that's happened in the past year, we've helped many of our clients with their life insurance decisions. Take it from a life insurance expert, the right time to think about life insurance, like with health, auto, or home insurance, is before you need it, literally. And the best time to think about it is when you're still young or in good health, so that you can get the best price for your life insurance policy. In this video, we'll go through 1, what whole life insurance is and how it differs from term life insurance. 2, the reasons for buying whole life versus term life. Basically, the pros and cons of each. One of the most contested and misunderstood topics in personal finance. And 3, when you should consider buying whole life versus term life, as well as what to do if you can't afford the expense of a whole life policy right now. If you want to skip ahead to specific sections, I've listed the timestamps for each section in the description below. So what is whole life insurance? Unlike term life, which only lasts for a specific period of time, say 10, 20, or 30 years, whole life is permanent life insurance. It provides lifelong coverage as long as you keep paying your monthly premiums, the cost of the policy. There are 3 main reasons for buying whole life insurance, whether that's term life or whole life. And these 3 reasons are survivor protection, estate creation, and estate preservation. The first reason, survivor protection. This refers to leaving something behind for your loved ones so that they're taken care of. The second reason, and one of my favorites, estate creation. Life insurance allows you to create an immediate estate for your loved ones via the money that's paid out if or when you die. I can't repeat this often enough. Life insurance is the only way to create an instant estate, even if you have little earnings, savings, investments, or assets. And the third reason, estate preservation. The money that's paid out can also be used to pay for inheritance taxes and federal state taxes so that your assets do not have to be sold to cover these costs. If you're enjoying this video so far and have learned something new already, give us some love with a thumbs up and hit that subscribe button. YouTube loves all this loving, and we'll push this video out to other folks like yourself who are interested in learning how to protect their loved ones. Life insurance, you should know, is very near and dear to my heart, not just because I do so much in this area with our clients, but also because I've personally been sold several crappy life insurance policies in my younger days. And I want you to be able to understand very clearly what you're getting into when you buy whole life versus term life. Now, let's talk about the 3 additional benefits that you get with whole life that you don't get with term life. And these 3 additional benefits of a whole life policy are cash accumulation, liquidity, and building generational wealth. So, additional benefit number 1 for buying a whole life policy, cash accumulation. With whole life, you have life insurance and a savings account combined into one. How cool is that? The savings part is referred to as the cash value and earns even more than you would in a typical high-yield savings account. Here's an illustration to show you what we mean. You can see from the graph on the left that with term life, you pay your premium over a specific period of time when the policy is valid, called the term. And you have your face amount or death benefit, the amount that is paid out to those you care about if you pass away within the term of the policy. You can check out our term life video here. If you're interested specifically in learning more about basic life insurance terminology and the pros and cons of term life insurance. Now, the graph on the right, this shows you what a whole life policy looks like. Again, you have your premium that you need to pay either until you turn 100 or until you pass away, whichever comes first. You can also choose to pay over a shorter period of time, say 20 years or until age 65, the so-called average retirement age. Paying over a shorter period means that your monthly premium will be higher, but we'll get to those details in another video. And again, as with term life, you have your face amount or death benefit with whole life. What's different is this cash value line right here. This is the cash accumulation we were referring to earlier. the savings component of a whole life policy. After you pay your premiums for a few years, when your cash value reaches a certain level, you can borrow or make a withdrawal from your cash value amount if you want. For example, to pay for a wedding, home renovations, your child's education, or other expenses. Which leads us seamlessly to additional benefit number 2 of a whole life policy, and that's liquidity. Think of this cash value that you build in your whole life policy as an additional emergency fund. Folks with whole life policies, when they need cash in a market downturn, like during the Great Recession of 2008 when the housing market crashed, or in March 2020 when the world shut down due to COVID. These folks with whole life policies, they don't sell their shares or other assets at the bottom of the market when prices suck. No, when you have a whole life policy, you borrow against the cash value in your whole life policy to meet your immediate cash needs. And when the market bounces back, as it always does, after a while, trust me, I've been through 3 recessions in the past 2 decades. When the market bounces back, you repay what you borrowed from your whole life insurance. This way, the liquidity benefit makes a whole life policy an attractive addition to your portfolio. You should know, though, that the death benefit and cash value amount of a whole life policy aren't separate features. You can either leave the money to your heirs when you die, or you can borrow against it and withdraw the cash for your own needs. But you don't get the money twice, unfortunately. For example, if you take out a $50,000 loan and then pass away, your beneficiaries would get the death benefit minus the $50,000 you already took out, plus associated interest, if the loan is still outstanding. This brings me to the third additional benefit of a whole life policy. Yes, we geek out a little bit over this stuff here. One that isn't talked about often enough, and that's that whole life insurance is a generational wealth building tool. Assuming that you haven't borrowed everything you could out of your whole life policy's cash value, your whole life policy essentially guarantees that upon your death, whether that's tomorrow or in 60 years, whenever, that there will be some money left behind for your heirs, a bit of extra wealth that can be used to pay for inheritance taxes or that first home, baby, college, or something else altogether. It also helps a lot that your heirs won't have to pay taxes on the money they receive from your insurance policy. That's right. The payment they receive from the insurance policy is completely tax-free. No inheritance taxes. If you're hearing a lot of this for the first time, don't be surprised. Why? Because the vast majority of life insurance videos and blogs you come across are not able to dive into the specifics of whole life. They simply don't understand it enough. Term life is easy to explain and grasp. You pay for 20 years, you're covered for 20 years, and what you see is what you get. No cash value, no borrowing, no generational wealth building. Whole life, on the other hand, is very complex, and very few people truly grasp all of its pluses and minuses. Now, my husband's a pretty smart guy. That's one of the reasons I married him. And it took him weeks before the light bulb went off on this one. I hope he's not watching this right now. But that's what we do here. Simplify complex money topics as much as we can so that you can make the best decisions with your money. So if you're enjoying this video so far, don't forget to give it a like and hit that subscribe button. We are here 4 times a week with quick money in a minute motivation and tips, and on Thursdays with deep dive videos like this one. Right. So back to this favorite topic of mine, life insurance. With all the advantages of whole life, you're probably wondering, why isn't everyone rushing out to buy whole life from Jen? What's the catch? Because there's always a catch. And it's that whole life is expensive. On average, whole life costs 5 to 15 times more than term life with the exact same death benefit. Because you need to pay in that extra money to build up the savings component, the cash value of your whole life policy, as well as the additional liquidity and generational wealth building features that your whole life policy has to offer. The best way to think about this is that it's forced savings, like your mortgage or Social Security and Medicare taxes. Term life, on the other hand, is affordable and can fit almost any budget because there is no savings component. We recently priced this out for a 28-year-old client. A $500,000 whole life policy would have cost her about $350 a month versus a term life policy at a little more than $30 a month. That's quite a difference in monthly payments. Now, why then do people still buy whole life? In a nutshell, when you go for term life and don't die while it lasts, you'll be happy to be alive, but you get nothing out of your policy. For more term life pros and cons and why you should consider buying a term life policy, check out our life insurance playlist over here. Unlike term life, though, whole life continues to build value over the course of your life as long as you keep paying your premiums. Value that you can either borrow against when you need it or leave to your heirs when you die. In a way, you get what you pay for. Basic protection for less money with term versus protection plus wealth building with whole life. Having said that, the high cost of a whole life policy is one of the main reasons I almost never recommend this option to our youngest clients. Even for myself, in my 20s, I was sold 2 of these policies, one for me and one for my mom, by an insurance guy who clearly didn't have my best interest at heart and was only interested in his own commissions. Listen, I was young, I was stupid, I didn't have YouTube and older me to guide me in the right direction back then. I ended up letting those policies lapse because I couldn't afford them when I went to Harvard for grad school. I got most of my money back with interest, so some value in a whole life policy even here, but I still ended up losing money because of all the fees and penalties I got charged when I closed the policies out early, also known as surrendering your policy in life insurance speak. But lesson learned, I won't let this happen to you. Before signing a whole life policy with our clients, we always go through some seriously detailed budgeting with them. And you should do the same too if whole life is something you're considering. You can check out our budgeting videos as well as download the free financial goal setting and budgeting templates from our website. I've included the link below this video. These videos and templates will help you figure out how much you can afford to set aside for your life insurance premiums every month. Always follow the same principle with whole life insurance as you would with the rest of your money. If you can't afford it, don't buy it or buy less of it until you can afford to pay more. Or consider term life insurance for basic protection. Nothing wrong with that either. There are ways to customize a term life policy so that you can convert it into a whole life policy later on when you expect your earnings to increase. You're probably thinking, man, this is confusing. And you're right, it is. Even with a so-called simple term life policy, there are so many ways that you can craft it to give yourself the most flexibility to adjust it over time to changes in your life and financial circumstances. And whole life, that's like a completely different beast of its own. But as our trademark saying at Diamond NestEgg goes, everyone's financial journey is different. So if you want to get into the specifics of your situation and what the best options are for you, shoot us an email at jennifer@diamondnestegg.com. We hope you enjoyed this video. If you did, or if you learned something new and awesome, please give us a thumbs up and hit that subscribe button. And hang around and check out the other great money-saving, wealth-building videos on our channel. See you again very soon.